All right, nice little day. I wanted the drop in the markets, and that's what we got today. We got across the board selling. The only thing really that was up was the VIX and interest rates, not even the dollar. But that was the kind of day I was looking for, just everything red. It wasn't a horrible, horrible day. There wasn't some Nasdaq minus 4% day. It was basically a 1% down day. But still, baby steps. I like it. I want the market to go down. I want my commodity stocks to go down because I really want to buy back what I sold and buy more. Let's start off by looking at the S&P. So today, we opened pretty much at the high of day, pretty much at yesterday's high of day, and just closed at the low of day. Just very much for me a bearish engulfing candle. It almost guarantees further drop. I think this S&P will go to 400 just because these sort of two candles here, and just generally there was a bit of resistance, and also because it's 400, and also because I don't think we'll get there in one day, but I think we will get to this ascending support here. So I think we're gonna at least test 400 tomorrow, at least. Maybe that's being a bit too aggressive, and if it's not tomorrow, it's the day after. 1.7, sort of down 2% is probably asking a bit too much, but still I think we're gonna go for 400 and eventually touch the ascending on the S&P, not in one go. Probably get there in 2 or 3 days, so we'll leave that there. And then we'll see if we hit the ascending, and then we break ascending. We'll see about that. But yeah, 400 for the S&P. And yeah, I think it'll go lower tomorrow. The Nasdaq, we haven't even touched prior resistance to see if it acts as support. If you look at the S&P, we did actually touch that, maybe acted as support for one day, but not much. But the Nasdaq, yeah, if the S&P is going to go to 400, the Nasdaq, you can expect it to go to, let's call it 298-ish, at least. Maybe even go below it. Let's see what happens. A close below it would be great. But the Nasdaq, if that was just to venture a bit lower, and then sort of everyone realizes that this is not actually acting as support, then we start to see how far we really have to go until we're testing this low. Because if we test this low, I think we're going to break it. I mean, we're weeks away from that. And if we do test it, we'll probably bounce a little bit and then hit the last low. We'll bounce probably a little bit from there. But anyway, I'm getting ahead of myself. But it's just to say that the Nasdaq is not too far from its bottom. Things can escalate very quickly. So yeah, so anyway, at the moment, the Nasdaq is actually outperforming the S&P because tech has had a bit of a run. The more speculative stocks had a bit of a pop, which makes sense in this kind of a bearish market where those stocks led the way down, and a few of them had some good earnings. But anyway, I do expect us to test prior resistance, see if it acts as support around 298, coinciding with the S&P around 400. The Dow Jones, at the beginning of the day, I remember it was testing this sort of zone up here. It broken out, if I can say that, of this descending line, but it didn't. It's all about where it closes, and it's all about the daily candle. And we close at low of day, and we even broke the last couple of days' lows. So for me, a small move down tomorrow, which is all but guaranteed because the S&P and the Nasdaq, the way we and the Dow, the way we close at low of day. But I think the Dow will go a bit lower, and then essentially we're going to start testing this zone over here. This sort of 33,000. And then the Dow Jones will look pretty bearish. That'll look like a nice sort of rounded top, if I can call it that. Just basically resistance around 34,300. I know we broke above it for 1 or 2 days up here and spiked on this one day, but essentially 34,300-ish has acted as very good resistance. And this descending line was pretty good. So yeah, if we do go a bit lower, and how much of a percentage move is this? 1.8%, 2%, maybe not done in one day, maybe early next week. The S&P, by the way, how much of a percentage move down is that to get to the ascending? 2%. What about 400? 2%. Between 2 and 3% really for the whole move. Nasdaq, just to test its low, 1.5. So it's really between, 1.5 and 3% move down to make all those targets. And that would mean the Dow Jones being down here. And then it looks really weak. And then we flush that, it will drag everything down. So Russell 2000, look at that. We're all the way back down to prior resistance acting as support. Now, it hasn't really acted as support yet, but it kind of makes sense that it stopped going down around here. Let's see. I still think tomorrow we're going to move lower because of the S&P, the Dow, and the Nasdaq. So maybe the Russell just goes a little lower, probably test this descending. Yeah, I don't expect a massive move lower tomorrow, but I do expect to move low, at least to test a little lower. So let's see, let's see. But I like what I've seen today in the last couple of days. I think quite a few people have just sort of turned bearish, even though technically we're still not. I mean, this is standard behavior, something breaks out, retest, goes back up. So, but still, I had quite a few people come out a bit bearish that were actually bullish 1 or 2 days ago. So let's see. Either way, very nice. The VIX also broke out of this descending. That was nice to see, 5%. It's got quite a lot of support around here. If we do have another move lower, I mean, it's very hard to call the VIX. Honestly, it's the hardest thing to call because it's just totally manipulated. I always hear people saying things are manipulated. When the price goes up, you never hear it's manipulated. When it goes down, it's manipulated. I never use that word, but the VIX is broken. It's not even manipulated. But if we have a move lower tomorrow, a bit like today, 1%, maybe we can finally get the VIX in some sort of 22 zone. I still think it belongs at 26 at least over here, but yeah, it was nice to see the VIX sort of break out and close nice and high. So I might start paying a bit more attention to the VIX. Now let's move to the fun stuff. The dollar, and I'll come back to the dollar later because commodities got slightly crushed, gold and silver, not crushed, but they went down, and they went down with a dollar that's red. Just remember that. If the dollar's red and the commodities are down, what happens when the dollar's green? Will the dollar go green? Well, yes, it will, because I think this is great action. 103.5 claimed. We even went a little higher. If you remember, I was saying that the descending line would act as slight resistance. It did, and then was sideways at 103.5. I think what the dollar's trying to do now is sort of just go sideways until it basically breaks out of this descending line, at which point it will start heading for 105, 106. I think that's very, very likely at this point. And what do you think is going to happen to commodities? What do you think will happen to gold and silver if that happens? And you can kind of see, I think, the future of the dollar by looking at yields. I don't want to get to yields just now, but basically the yields are testing this horizontal line. Now the dollar, sort of had a head fake after Powell, then reversal, nice strong reversal. I think the Friday close was here too, so very, very nice hammer on the weekly. The point is, I think we've reclaimed 103.5 despite this sort of tail and hammer today. I think it was actually quite bullish today, even though we're down 0.25%. I think we're going to go sideways, break out up here. Commodities will go low. The yields will go up with the dollar. The markets will go low. The VIX will go up. Sounds complicated, but it's the same thing. It's dollar, yields, volatility up, everything else down. And I think we're sort of gearing up for another run to that old pattern. Remember, this is what during the majority of the bear market here, that's kind of what's been happening. We had a nice retracement, but this little pop here in the last couple of days, this kind of says, hey, we're gonna go back to the old way of doing things. This is a reversal of this trend since the drop. So that's my take. I'm not going to bother with the FXs because the DXY is essentially the euro, the dollar, and the pound. Sorry, the euro, the yen, and the pound. I'll go on very quickly. Yeah, okay. Well, it's reflecting the DXY. I think we're going to go down here. Euro down against the dollar. Yeah, we've reclaimed the breakout of this descending line, sideways up and then higher, and the pound probably lower. Yeah, I don't see it going above this, back down. So yeah, dollar back up. I think 105, 106 will soon be tested. We just got to break out of this descending line, and in particular, this area, 104, because that will take out the previous high we did there, which is also kind of resistance from this one. So what you really want is a close above 104. And then nothing's guaranteed, but you've got a guaranteed run to 105 point, whatever this is, 105.6. Now let's look at yields, which is slightly ahead of the dollar. You can see up here, bam, we moved up with the dollar. And this is the 1 year. I think this is pretty significant. And now we're basically going sideways like the dollar, in this case, at the all-time high, above a resistance, which I think you can all see is pretty clear. We're holding above this resistance. And yeah, this is my old annotation from yesterday. I think we're just going to go higher. So this is very, very significant. The 2 year, which is the most important of all the yields. And you see, I forgot to take out yesterday's notes, but yeah, sideways and up. And look at today. Today is that green candle, by the way. We just nice green candle, higher than the last couple of days, close at the highest in loads of days. And I think we take out this horizontal line, let's call it 4.55. We're basically going to go test the old high. I even have to draw this line now. And that's when things get very serious, because the Federal Reserve has to and does match the 2 year of the free market, this 2 year here. So if this goes up, the Fed will have to follow suit. So what happens at the next interest rate decision? What do you think the market will do once they start seeing the 2 year go up? They'll be like, oh no, the Fed's going to raise rates more than we think. Market down heavy. So, I've been talking about this move here too. So 5 year following the 2 year hasn't hit the horizontal, but still same sort of candle pattern, nice bullish candle, bullish close, best close, went higher than the last couple of days. 10 year kind of copying, and now you could kind of say it's claimed the breakout of the descending line. 30 year, same as the 10, it'll take 2 or 3 days and this will be all the way up here, especially if the 2 year starts to break out of this 4.5. Watch out with the yield. It's happening now. If this starts to go up there, you'll be, surprised how fast the market just goes, oh, wait a minute, yields are going to make new highs. What the hell am I buying this for? The algorithms will, I don't know. That's what I think. I think the market will just sort of wake up out of its sleepwalk higher and just flush old school, minus 4% days. Those days, I want those days to return. And then you've also got the European yields, right? Okay, today was not exactly a big green day, but for me, this is just going sideways up and going to make new highs. So yield, for me, the yield is the most important thing. I remember everyone was saying that, and I was saying that amidst the early stages of the bear route, when everything was crashing, everyone was saying yields is the most important thing. You wake up, you check yields. Everyone was talking about yields. Then no one's, everyone stopped talking about it. For me, they're the most important thing. They've been the most important thing for about 1.5, 2 weeks. And now it's, for me, the epicenter. So yields and the dollar. Everything else should follow. Having said all that, let's look at commodities. So copper. Okay, I didn't actually look at copper today. Trying to reverse here, just above, well, basically after touching 4. That's interesting. I thought they go a little lower. But then again, if the dollar and the yields go up and the markets go down, this will go lower. But at this point, if it goes lower, it'll be 1 or 2 trading days later. We'll probably start to flush as we hit ascending. So it'll probably go much lower. So, you know what I mean? You've got to think about the time element. If we start to go lower because the yield's a dollar, by the time we start to go lower, we'll be straight away here, which will mean we're coinciding with the $4 level. And we'll start flushing at 2 support levels, not just $4, but also the ascending if we're there, roughly, even if it happens earlier, which means it'll be a big flush down to 3.75. That's the way I would see it. And I'm just saying that out loud. I haven't really thought about this, but that's my intuition. It wouldn't go a little lower, it'll go at least 3.75. We'll see what happens. I'll leave that in. Although sometimes I accidentally delete it. It just looks bad. Natural gas. Yeah, I actually looked at natural gas today. It looks okay now, actually. And I said it yesterday or the day before. This descending line is becoming extremely credible. So I think you can see it's, the chart is starting to really respect it also. Basically, if we break out of this, especially if you close above it, because sometimes during the day you'll have what you think is a breakout and people will chase it. I understand that, especially chasing it here wouldn't be the dumbest thing because, even if you're wrong, oh my God, I've got an entry at 2.5. It's a great price. But it's all about the close. You can like look at the Dow, for example. During the day, you could say, oh, we broke out of the descending. And fair enough. But then we close all the way down here, and now you've just got even better resistance. So the close is always about the close. That's something I never respected when I was a young trader. I thought, oh my God, look, breakout. You can see it technically. Yeah, but it didn't close there. So, and the close happens at end of days. So that's also quite tough. Are you going to buy after hours? Are you going to buy pre-market the next day or during regular hours? That's a whole different topic. But anyway, natural gas, I think, is basing very well. I think 2.5 is a buy. I added to my gas stock already around here, twice actually around, I think 3.5. I would have bought this at 4. I've said it already. I would have bought it at 4, 3.5, and 2.5 for an average of whatever that would be, 3.75 or something, or a bit lower. But yeah, I think this will actually break out of this imminently, despite commodities basically going to go lower if the dollar and yields go up. I just feel like this is due for a bounce for its own individual supply demand chart characteristics. But again, it's not guaranteed until there's a close, outside of this descending line. I still think natural gas is going to make it any day now. Oil, yeah, sideways, middle of no man's land. I think down here it's a buy. Up here, I wouldn't even call it a sell. It's just, I wouldn't be buying up here because it's obvious resistance, but still it's not a sell because this should really get to the low 90s. So let's see how it reacts to geopolitical events. Obviously, you've got supply and demand of oil in itself that drives the markets, and also the dollar and the yields in the market. Let's just see what happens. For me, I'm not in oil, but I would be long as I would be typically commodities. But yeah, sideways day. Now let's look at gold and silver. So I'm very glad to see this. I said this too. I said we would come all the way down here, touch the channel, bounce a little around 1880. I said maybe go for 1900, but maybe not. And that's kind of what we've done. Actually, what I noticed is if I just took the 15-minute chart out, I also noticed this little resistance, 1, 2, 3, 4. And once I saw the fourth one, I thought, okay, that's obviously a trend line. You could even draw another ascending line here, but we don't need to get too cute about it. The point is, you had clear resistance on the upside, and now it doesn't even matter about that. Now we've closed, worst close in many trading days. We've lost the ascending support. This is exactly what I wanted. I thought we would bounce off this, and I thought we'd flush it. Now I think we're going to 1830, so that's why I haven't bought any miners. That's why my targets are down here. I felt like being aggressive and not just being content with this drop. I thought we'd go a little lower. And the more I look at it, the more I think, yeah, we could go lower. I mean, think about it again. The dollar was red. The dollar was red, and we're red. I mean, you can't see it now because TradingView is reset, but we were down. I forgot, but you can see from the chart, we're down. We close at low of day. That's despite the dollar being red, and I think the dollar's going to go up with yields. So if the dollar starts to go up, and it's got quite a way up to go, I think we can all agree that 1830 is in the cards. So I think gold to 1830. I also think we'll go to 1800 because then this would be, I mean, if you look at the chart, this line here, this 1800 line is for me the more important, the heavier support and resistance line, more so than the one above here, 1830. Now, I did say it's pretty hard to call the support around here. There's a lot of chop, but for me, 1800 also is a psychological number. Let's see, but I think we'll get to 1830. I think that will act as a slight support, but I do also think that 1800 is in the cards. By then, it depends what's happening to the dollar, the yields, if there's a move higher, that's possible. Also, silver will impact it. And again, I'm buying the miners, so ultimately, I'd be watching the miners chart because you could have gold down $10, but the miners up. And I wouldn't care about gold because I'm in for the miners and the stocks I'm buying. So ultimately, all I care about is the GDX charts, which I'll get to just after silver here. Now, silver, just like gold, closed at a new low, lost support, just like gold. It's a different support. Gold was ascending, but new low, close, lost support. Silver, new low, close, and lost support. In this case, horizontal support. I think silver should go down now to 21, which is how much of a move lower. And you can see my notes from yesterday. 3.5%. That can be done in one day, but probably be done in two. So again, early next week, I feel like everything early next week will happen. You know, whether it's the Nasdaq, the SPY, the S&P, the Russell, the Dow going down between 2 and 3%, or silver going down between 3 and 4%, or gold going down to 1830, which is, I don't know how much, 1% or something, 1.5%, 2%. All of these moves can be done in like 3 trading days. Maybe less, actually, depends. So yeah, I do think silver will go down to around 21. Don't want to get too greedy. It could bounce before it hits 21. Could bounce at 21.11, for example. So I will be watching silver, I'll be watching gold, I'll be watching the dollar, interest rates, the markets, and the GDX to get my entry, because I haven't bought any miners. Let's move to the miners. Looks more like the gold chart because it's sending support. And the GDXJ, remember, is actually weaker, which makes sense, but it's actually closed below the ascending line. But did I draw the ascending line perfectly? Because I got thick lines here. You see, you could kind of say it's closed on the ascending. So I'm not going to say it's closed below support yet. We've actually filled that gap too. Wow, I didn't realize that. Did GDX fill the gap? No, it didn't. But GDX should go down to this ascending point, which at that point will mean closing the gap. Yeah, so if gold, silver go down, markets go down, like I'm saying, you can expect the miners to go down another level. Now, for the GDX, that will mean coming at least this low to close the gap. But then for the GDXJ, let's just see how much that is. I want to see if silver goes down 3 to 4%. You'd expect the GDXJ to at least match that. I feel like the miners are going to lose their support. Like, I feel like GDX is sending support. It might act as support for one day. You know, yeah, we've closed the gap, we're bouncing off support, but a bit like gold, and yeah, a bit like gold, you know, just bouncing off its support. 3 or 4 days later, we're going to go to the next level. So I don't want to get too aggressive and say, no, I'm not happy, I want it lower. I will be nibbling finally tomorrow. If we make this move in GDX and we hit this, and GDXJ will probably go, I don't know, 35. Why not make it a nice number? Wherever it ends up, I'll start nibbling back my first miners that I've been selling, you know, the ones that I've been selling up here. And then if we go lower after that down here, I'll be buying back what I sold here, and I sold a lot here. So just constantly buying back what I sold at a better price. Just as on the way up, I'll be selling what I bought, but at a better price. Just constantly flipping it. The compounding, I mean, the amount of money you can make by just trading your long-term positions, which is basically what I do. I swing trade my long-term positions, always keeping a minimum amount in my long-term positions that I'm satisfied, you know, that even if I get all those swings wrong, which means selling and it keeps going up, I'm still going to make a lot of money and, you know, have the ability to close my positions at a price that I think is astronomical. I mean, the only time I would close all my gold and silver miners is if I think they're completely overpriced, which to be honest would mean, you know, going up all the way over here or something. So yeah, that's just the strategy in a nutshell. But the point is, I think I'm going to buy back tomorrow if I see the GDX hit this part, close the gap, hit ascending support. And I don't know where the GDXJ will be at that point around here, but yeah, I'll be buying back finally. I hope that makes sense. I'm very happy with the market going down. I think I've been patient, and I get to reap the rewards of being patient, but I'm going to be greedy by one extra day, and I do think the market will go lower. I do think the dollar, and even if I don't get the market right by one day, I think Monday, Tuesday it will happen, because I do think the dollar will go higher, yields will go higher. I mean, they've already started, and markets will have to follow lower, and commodities seem to be following the markets lower. in the face of higher dollar and yields and volatility. Finally, let's finish with Bitcoin. Bitcoin, I also said that I was a little bearish at this point because it was following the market. And technically, it was putting in a bit of a top here. And then here we see a nice flush. It happened kind of recently. There was a bit of a drop. I think there was news also about some company no longer, which one was it? Not CoinDesk. I forgot which one it is. There's some SEC settlement, whatever it is. You guys probably know it. But yeah, like I said, news is just a catalyst for what was going to otherwise happen technically. So where do I think we're going? We're going to test prior next level lower, so which is this level. And you could almost say that this little wick here has touched this wick here. So you could say we've already had one test, but yeah, I think we're going to hit 21,000. We'll go a bit lower. I also think the markets will go lower tomorrow. So you could get the Nasdaq dragging this down to sort of underneath 21,000. And then we'll see. It should have a bit of a bid then. But yeah, very short time bearish Bitcoin. It's starting to resume its pattern of following the markets. And I've already said that I think the market's going to go lower. Anyway, that'll do. I think that was a bit too long, but I hope you enjoyed that. I'll make another video tomorrow. Yeah, happy trading tomorrow.